Good evening. You're watching Primetime. I'm Tamanna Inamdar.
And my name is Ayush Alavadi. Let's have a look at today's headlines. It's a status quo policy. The RBI leaves rates unchanged and retains the neutral stance. Raises inflation forecast by 10 basis points.
The RBI slashes merchant discount rates to boost card transactions. New rates will kick in from January this year.
Indian markets fall to their lowest level in almost 2 months. Banking stocks take a beating.
The Bombay High Court upholds the constitutional validity of Real Estate Regulation and Development Act but gives some protection for developers against project cancellations.
More trouble for Anil Ambani as China Development Bank files insolvency plea against group firm Reliance Telecom.
Warnings keep piling up even as Bitcoin surges past the $12,000 mark. Mark Mobius likens the cryptocurrency to a religion and says it's a bubble waiting to burst. Aditya Puri of HDFC Bank says investing in Bitcoin is like betting on a horse. The top story of the day, of course, there were no big surprises as the RBI's Monetary Policy Committee kept its benchmark rates unchanged in a 5-1 vote. The MPC maintained its neutral stance on policy, even as Ravindra Dholakia voted for a 25 basis point cut in the rates. The committee raised its inflation projections for the second half of the year. It now expects inflation to range between 4.3 to 4.7% in the third and fourth quarters of FY18. On the growth front, the MPC maintained its forecast of 6.7% GVA growth for FY18. RBI Governor Urjit Patel said all options are on the table with regards to the rates.
We have a neutral stance, which means that depending on the data flow in the coming months and quarters, will determine what we do regarding the policy. So the neutral stance is there for a reason, that all possibilities are on the table. And we would look carefully with both the inflation data and the growth data that comes in the coming months. The changes that on our inflation projection is at the end of the day very small. It's 10 basis points compared to the October policy. And we are still retaining the growth outturn for the full year at what it was in the October policy.
Well, RBI Deputy Governor Viral Acharya says that the liquidity situation is normalizing. Acharya added that he expects liquidity neutrality to be achieved by the first half of 2018.
The liquidity conditions have continued to normalize gradually during the year. The overhang of liquidity surplus in the banking system post the withdrawal of specific banknotes or SBNs in November 2016, which had touched a peak of close to rupees 7.96 trillion at the beginning of the year, has since come down. Banking system liquidity has in fact been moving towards neutrality as the currency in circulation has expanded by rupees 7.6 trillion during the period January 6th of this year to November 24th. It is expected that the liquidity conditions would be marginally still in surplus by end of fiscal year 2017-18. Given the trends in currency in circulation, it is expected that system liquidity may reach neutrality in the first half of 2018.
Now, Ira Dugal sums up the key takeaways from RBI's monetary policy decision in this report.
A safe and neutral policy from the Monetary Policy Committee, which completed its 5th meeting of the current financial year. In short, there was no change in rates, there was no change in stance, which was maintained at neutral. There was a slight uptick in the inflation forecast, which is now at 4.3 to 4.7% in the second half of the year, and no change also in the GVA growth forecast for the current year. But there is, of course, a lot going on behind the scenes, so not to say that everything is as crystal clear as that short summary makes it out to be in anything. But cut, in fact. So if you look at the RBI's projections on inflation, they seem to be fearing that a whole host of factors could come together to push inflation up above the 4% mark and perhaps closer to a band nearing the 5% mark. The factors that they talk about, firstly, they say that the food and fuel inflation have already picked up, and those are the factors that impact household budgets the most. They talk about inflation expectations having firmed up, and in the surveys released in the second half of the day, inflation expectations actually have inched up across all categories. So 1 year, 3 months forward, inflation expectations do seem to be firming up. The biggest risk in perhaps the RBI's view, but certainly in economists' views, continue to be the fiscal side of things. There is concern that farm loan waivers would put pressure on state finances. Central finances would be under pressure as well because of what we have seen happening on GST revenues, and the cuts in certain items and GST rates on certain items could only worsen the fiscal concerns. So the RBI takes note of that. In the October policy, they had said a 50 basis point slippage on the fiscal could add to 25 basis points on the headline inflation based on the baseline projection. So, that is the core of the reason why they have not actually changed rates. The fact that they think there are a lot of upside risk to inflation that could materialize over the next 6 to 12 months. The problem is that while there is a certain amount of decisiveness on their view on inflation, their view on growth is pretty much as tentative as anybody else's. So they talk about some positives playing out for growth. They talk about the fact that credit growth has picked up, companies are being able to raise capital from the markets, and also that if stressed balance sheets start to recover, you could see investment pick up. But all of those are big ifs. As things stand right now, growth is still weak, even though it is recovering. The RBI has held on to its 6.7% forecast, but there is a chance that even that 6.7% GVA growth forecast would not be met. So the question then is that if growth underperforms in Q3 and Q4, would the RBI once again be tempted to cut rates, or rather the MPC, would it be tempted to cut rates? Well, they've left room. The stance is still neutral. And of course, they have said that they can move in either direction based on that neutral stance. So let's see. For now, though, most people think that this is the end of the rate cutting cycle. You could be in a flat repo rate cycle for some time to come now. Just a quick word on liquidity. There was a lot of anticipation on what the RBI would say on liquidity. They said that yes, liquidity has tightened compared to what it was last year when demonetization deposits had flooded the system, but you are still in surplus mode. You would expect to be in surplus mode over the course of this fiscal. You would turn neutral early part of next fiscal. And then finally, Viral Acharya said that if required, they would use open market operations either to absorb liquidity or to inject liquidity as the situation demands.
Right, to speak more on the credit policy, we're joined now by P.K. Gupta. He's Managing Director at the State Bank of India. Thank you so much, Mr. Gupta, for speaking with us on Bloomberg Quint. First, your comment on the policy overall. Do you also see that the rate cut cycle is now nearly over?
Yeah, I think the policy is more or less on expected lines. I think everybody expected the status quo to be maintained. That is what the policy has delivered. Yes, if you look at the liquidity, if you look at the overall situation in the market, I think for the time being the interest rate cutting cycle seems to be over. If you look at the language which the RBI has been using, so as it is the inflation forecast, they have increased it to 4.3 to 4.7 for this year. And going forward, it could even be higher. But at the same time, the RBI has been saying it very clearly that they will be looking to maintain inflation at 4% on a sustainable basis. So which means that any sharp upturn in the inflation, they could be ready to act on that actually. Yes, on the other side, the market does expect that the GVA number which RBI is expecting may probably undershoot a little bit. That could be one reason why the increase in the interest rates may not happen very soon. But I think we are in for a longish pause, as you said, actually, and I don't think that interest rates are moving either way, at least in the short run.
Mr. Gupta, another important point that the Reserve Bank made today in its credit policy was on bank recapitalization, with the RBI governor stressing that reform would accompany the recap and most of the benefits would go to banks that manage their balance sheets prudently. Do you think this will help perhaps the weakest in the system, this approach?
No, I think, some of these things the government had said when they had announced the capitalization plan itself. See, there are two parts to the plan. One is that, there are banks who need capital to maintain the minimum regulatory capital requirement. So some part of that capital will go to those banks. Apart from that, I think there is a very large amount of capital which will go to the banks who need it for the purpose of growth. See, if we look at the State Bank of India, I think we recently raised the capital from the market. Also, we think that we are fairly well capitalized. We don't immediately need capital for growth, but if you look at a 2 to 3 year horizon, we will probably need capital for the growth also. At this point of time, the credit demand itself is very muted, so we are able to meet the demand. But if the credit demand does come back into the market, so the banks would need capital. So in terms of reforms, I think the indication from the government has been is that, they would like to see more MSME credit growth, more credit going to the export sector. Some of those sectors would be under the focus. So, but for some of the banks, like capital has been a constraint for the purpose of undertaking loans. That will not be the case. But I think as of now also, there are many banks who do have enough capital. They are ready to fund the growth, but credit demand itself is low at this point of time. But I think the banks are getting ready to meet any demand that may come up in future.
Right, Mr. Gupta, we'd request you to stay with us while we also discuss another important policy announcement, which happened to be the rationalization of the merchant discount rates. Now, in order to boost transactions via point-of-sale machines or POS machines, the RBI has decided to cap the merchant discount rate. For small businesses, the MDR cap would stand at 0.4% or rupees 200 per transaction. Whichever is lower. For other merchants, the MDR cap will be 0.9%. or 1,000 rupees per transaction, whichever is lower. Presently, the merchants have to pay a blanket MDR of 0.75% for card transactions up to 2,000 rupees and 1% for transactions worth higher. Listen in to RBI Deputy Governor BP Kanungo outline the twin objectives behind this move.
We have been guided by twin objectives in this. The first is that the acceptance infrastructure will accept it more happily, and it should also leave money on the table for the stakeholders so that they are interested in the game to invest in technology and other things. It has many salient features that the previous system of ad valorem rate, it continues, but the slab system has been done away with. We have gone by the merchant category, so which will be very simple to administer. There is a limit also on the card transaction. And the third aspect is that a differentiated MDR for asset-light infrastructure has been put in place, which will be slightly less. So with this, we believe that the debit card usage at the POS terminals, especially for the small merchants, will gain further boost.
Well, Dilip Asbe, Chief Operating Officer of the National Payments Corporation of India, joins us now on the phone line. Mr. Asbe, thanks so much for speaking to us. This is Ayush Alavadi on this side. I want to start by asking you what you make of this rationalization of MDR. Do you really see it as a boost to digital transactions, especially for smaller merchants?
So definitely, I think there are three takeaways from this rationalization. First is, for the asset light, which is the smaller merchant, which will not be able to afford a POS machine, right? Or they don't have the connectivity. They can look at a light model of digital acceptance, which is Bharat QR payments. So, and the rates are fairly reasonable in the range of 30 basis points and 40 basis points, right? So, which is kind of a very attractive for the market expansion on the asset light model, right? That's the first takeaway, which I look at it. The second takeaway is, the earlier below 2,000, above 2,000. I think RBI has brought in a lot of simplicity instead of relying on the amount slabs, right? Making a unified rate for the 90 basis point and 80 basis point for the QR code based payment. So I think that will create a simplicity. The third is, as rightly said by the Deputy Governor in his speech, right? In India, if you look at it, most of the issuing banks most of the large banks are the issuing banks and the acquiring banks themselves, right? What it means is large banks are deploying the terminals as well. Look at the State Bank of India HDFC Bank, and you would see that Axis Bank and some of the other large public sector banks are also deploying the terminals in acquiring the merchants in a big way. So what it means is now these banks will have some money on the table, right? Because, if the MDR is in the range of 90 basis point or 80 basis point, right, irrespective of the transaction amount, that means that, they will have some margins to deploy and acquire more merchants, right? So they can invest into the business, right? That's definitely the great sign for us. And we believe that the banks will invest and now will not hesitate to invest now, and because there is a certainty, simplicity in the charges, right? So they can go back and deploy more terminals in this whole process. And because the RBI has created a cap of 1,000 rupees, so the high value transactions also could transfer to debit cards. That's what also I foresee.
Okay, it's interesting you talk about the large banks, Mr. Asbe, and to stay on with us because we're speaking to PK Gupta, Managing Director of State Bank of India. And Mr. Gupta, I was very keen to get your point of view on the MDR rationalization. Right now, big banks enjoy a huge proportion of, the collections from MDR. What does this rationalization do to the entire system?
See, I think this is something which has been in the works for quite some time. I think RBI has been talking to the bank, so some rationalization was expected. So what this does is probably immediately the banks who have been on the issuing side, so their, the income which they get from the core gets affected a little bit actually. But ultimately, I think in the long run, this is a very good move. Because what happens is that that ecosystem, the infrastructure has to be created. So I think so that people will get incentivized for that. But from the bank's point of view, the more acceptance of cards, the more digital payments, which means that, overall increase in the volumes itself will compensate for any, the hit that we have on account of decrease in the MDR. And secondly, the more and more digital modes are used, the POS machines or even on the Aadhaar or the QR codes, which means that, our cost which we incur on maintaining the ATMs, filling up cash in that will go down. I think some of the cost saving that we do on maintenance of ATMs and loading of cash there and the cash handling, plus the increase in the volumes in the digital transactions will take care of any hit that the banks could have on account of this rationalization. But I think if you look at it in terms of a long term, this will be, I think, good both for the merchants as well as for the banks actually.
Just one quick point from you, Dilip Asbe. In the broader picture, if the move is or the aim is to move more and more people from cash to card payments, even for smaller amounts, do you think a case is made for doing away with MDR completely on certain items or certain categories of items which would perhaps fall in the essential box?
See, I don't think so. Doing away from MDR, but we always kind of give a fixed MDR.
Well, obviously, we're going to be discussing all these changes, Tamanna, on Prime Time Debate. That's right?
Absolutely. We didn't have a good line there with Mr. Asbe, but we'll try and get back to him and get the rest of that comment. You can see that on BloombergQuint.com. And thank you so much, Mr. PK Gupta, also for joining us. But later on, we will have Ira Dugal speak to Shogata Bhattacharya. She's speaking to Tushar Arora as well, and Aditi Nair joining in. So do catch a slice of that conversation up ahead on Prime Time Debate. Now, IT major Infosys has filed for a consent application with market regulator SEBI over its settlement with former CFO Rajiv Bansal. Sajid Manga joins us for more details. Sajid?
That's right. Infosys today informed the stock exchanges that it has made an application for consent with the market regulator SEBI. This pertains to the agreements that it entered into with respect to the former CFO Rajiv Bansal. Now, remember, Rajiv Bansal resigned in October 2015 over differences with the top management there, and as a result of that, the board and the top management entered into a severance package with Rajiv Bansal. The package was roughly around 17.35 crores, and Infosys paid nearly 5 crores before it stopped or suspended payments to Rajiv Bansal. What Infosys had very categorically stated that it failed to take the nod of the NRC, which is Nomination and Remuneration Committee, and the Audit Committee before entering into a severance agreement. It also failed to inform the severance agreement, the cessation of the payments, which is stopped in early 2016, and also the initiation of the arbitration proceedings, which began in April 2017 with Rajiv Bansal. Again, the company did not disclose the further details of it, but it seems that the company has gone and pleaded with SEBI without taking the blame of it, and it would take at least 6 months to a year before a consent application goes through, and Infosys would have to pay a small amount which would be decided by the SEBI's committee.
Right, thanks so much for that, Sajid Pangat there, with all the latest details.
Well, moving on, now the Bombay High Court has upheld the validity of the Real Estate Regulation and Development Act, that is RERA, of course, responding to a bunch of petitions filed by developers, individual plot owners challenging the validity of RERA. A two-judge bench deemed the act constitutionally valid. Remember, RERA mandates that all developers register themselves under a common regulatory authority. It also allows buyers to claim compensation for delay in possession and envisages cancellation of a developer's registration in case the developer fails to complete the project within the stipulated deadline. The bench, however, allowed a leeway for developers by permitting the state-level RERA authority and appellate tribunal to consider delays on a case-by-case basis.
Now, the China Development Bank has today moved the National Company Law Tribunal seeking to club its insolvency plea against Reliance Telecom with the other insolvency petitions filed against the company by its lenders. So what is the rationale behind the Chinese lenders' plea? Well, Shivani Saxena sums it all up in this report.
China Development Bank is a creditor to both Reliance Communication or RCom as well as Reliance Telecom. While it has already filed insolvency application against RCom, today it proceeded against Anil Ambani promoted Reliance Telecom as well. The matter will now be heard on December 18th, giving company enough room to file its rebuttals. If you recall, Tech Mahindra too had initiated insolvency process against Reliance Telecom. The company will now fight the battle to club various insolvency petitions so that they can be heard together. Reliance counsels told the NCLT that talks are on between the parties to settle the matter out of court. The matter is at the earlier stages of admission, which gives parties enough room to wiggle to negotiate the settlement terms. But if the parties don't agree to these terms and the matter is admitted, the company will undergo the entire process prescribed under the novel bankruptcy regime. At the end of this process, it could come out with a resolution plan to improve the financial situation of the company, or the company will be liquidated. It remains to be seen what will be the fate of Reliance Telecom.
Finance Minister Arun Jaitley met representatives from industry bodies today for pre-budget consultations. ASSOCHAM, FICCI and CII have sought a reduction in corporate tax in the upcoming union budget. ASSOCHAM and FICCI have asked for the corporate tax rate to be cut to 25% from 30%. The CII has requested a deeper cut and wants the tax rate to be fixed at 18%. CII has also sought the removals of exemptions, cess and surcharges and requested the Finance Minister to permit banks to reissue recap bonds to institutional and retail investors. Not just that, CII has also sought to rationalize the 12% and 18% GST rates. EEPC India, meanwhile, sought an exemption of export incomes from income tax for a period of 5 years. Now, the GST Law Advisory Committee has suggested significant changes to GST in its report submitted to Revenue Secretary Hasmukh Adhia. The panel has suggested allowing interstate transaction under composition scheme and having 1% GST on turnover for traders, manufacturers and restaurant owners who avail the scheme. It has also recommended allowing more service providers to avail the composition scheme. The panel has also sought the simplification of return filing process and allowing filing of summarized GSTR 3B returns for 1 year and allowing revisions to be made in the returns. Remember, the 6-member advisory group was set up by the Ministry of Finance on the 2nd of November. And Indian markets fell to their lowest levels in over a month after RBI's policy decision. Losses in banking shares led to the fall. Sensex and Nifty both incurred losses over 0.5%. Broader markets also posted sharp cuts. Reliance Industries and Maruti Suzuki were the top gainers in trade today, while the top losers were Sun Pharma and State Bank of India. And the National Green Tribunal has sought a detailed action plan from Delhi, Haryana and Punjab governments to tackle air pollution. Delhi government filed an action plan before the bench today, including the ban on construction activities, entry of trucks and the implementation of odd-even plan. But the NGT asked the Delhi government to file a detailed report, including details of exemptions given in the odd-even scheme. And Prime Minister Modi today questioned the Congress's move to link the Ram Mandir dispute with elections. Narendra Modi, in a rally in Gujarat, pointed out that lawyer Kapil Sibal's argument in the Supreme Court to postpone the hearing in the Babri Masjid matter after the general elections is uncalled for. Remember, Kapil Sibal, who represents the Sunni Waqf Board, has argued before the Supreme Court bench to hear the Babri Masjid matter after the general elections in 2019. He is also a senior Congress leader.
સુપ્રીમ કોર્ટમાં કોંગ્રેસના વકીલ કોંગ્રેસના પાર્લામેન્ટના મેમ્બર કપિલ સિબ્બલ કોર્ટમાં બાબરી મસ્જિદ બચાવવા માટે કોર્ટમાં વકીલાત કરે એમને અધિકાર છે એમાં અમને વાંધો નથી તમે દલીલો કરીને કેસની અંદર વિગતવાર વિગતો મૂકો એ ભારતના ન્યાયતંત્રનો નિયમ છે પણ તમે કોર્ટમાં એવું કહેવાની હિંમત કરો કે 2019માં લોકસભાની ચૂંટણી છે ત્યાં સુધી આ કેસ ના ચલાવવો જોઈએ શું ભાઈઓ બહેનો આ રામ મંદિરનો મુદ્દો પણ ચૂંટણીઓના નામે લટકાવવાનો ભારત એવો છે છાસવારે ચૂંટણીઓ ચાલે 6 મહિને ક્યાંય નહીં ચૂંટણીઓ ચાલતી જ હોય છે તો શું દેશના કામ અટકી પડે ભાઈ
Now, a bit of international news, and Ayush is joining us for all the big and top international stories of the day. Ayush?
Absolutely, Tamanna. Well, the biggest international story of the day has to be the rally continues for Bitcoin. The cryptocurrency has surpassed $12,000 for the first time. This comes amid speculation that the widespread use of futures will help lead to digital currencies being viewed as a legitimate asset class for mainstream investors. Bitcoin, which is the largest cryptocurrency by market value, has soared from less than $1,000 at the start of the year. Well, Bitcoin may well be a bubble, but bubbles can last for a long time, says Mark Mobius, executive chairman of Franklin Templeton's Emerging Markets Group. Speaking to Bloomberg, Mobius says Bitcoin is like a religion. Either you believe in it or you don't. Listen in.
Well, I always tell people Bitcoin is giving tulips a bad name. And the bottom line is that it's a religion. You have to believe in it or not. If you believe in it, you will buy it and you'll save it and you'll think that it's going up. But if you really did some close examination, you have to realize it's not a currency. It's a medium of exchange. And there's a real requirement for it because as the U.S. Treasury continues to crack down on illicit transfers of money, you're going to get all these people around the world who want to hide their transfers, searching for a method of doing so, and Bitcoin seems to be the way they're doing it.
Well, it may be like a religion for some, but not quite so for India's top banker Aditya Puri. Listen in to what the managing director of HDFC Bank has compared betting on Bitcoin actually to.
So when it's pure speculation, when at this point Bitcoin can only be used mainly for illegal uses, and based on that, use pure speculating. It's probably worse than a horse race. So let's not. But can cryptocurrencies come? Yes, sure. With a change and appropriate regulation all across it. Long time from now, if you're a betting man, you can bet on a horse, you can bet on Bitcoin.
Well, Apple may have lost its market share in China in recent years, but that hasn't deterred Apple CEO Tim Cook from striking a positive note on China sales numbers. Speaking at the Fortune Forum in Guangzhou, Tim Cook said that he couldn't be happier with how the iPhone X is doing in China. He also expects China to reinstate some of the popular applications of Apple which were removed from China's App Store earlier this year. And on to an important geopolitical development that may heighten tensions across the Middle East. US President Donald Trump may recognize Jerusalem as the capital of Israel and direct the State Department to move the embassy there from Tel Aviv. The announcement is expected later today, but it could be more symbolic than substantive. The White House warned that any actual move would take years. The US also added that the specific boundaries of Israeli sovereignty over Jerusalem is still subject to peace talks. Well, Sky News has reported that UK authorities have foiled a plot to assassinate the country's Prime Minister Theresa May. Last week, the police arrested 2 men who they believe planned to detonate an explosive device in the Prime Minister's office at Downing Street. Well, Tamana, that's all we have on the global front. But you got to tell me, what's up with Primetime Debate today?
Well, Primetime Debate is talking about a subject which has a lot of different and fiery opinions on it. The Supreme Court has asked the centre to consider creating a law to cap legal fees. Now, do lawyers charge too much, and is it fair to cap anybody's professional pay? We're talking about that up next on Primetime Debate, so don't go away.